Welcome back to the Thinking Crypto Podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. This content is brought to you by Uphold, which is a great platform that I've been using since 2017. You can buy, sell, trade crypto on Uphold, as well as precious metals and equities. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. If you'd like to learn more about Uphold, please visit the link in the description. All right, my friends, I got some very big and bullish news for you. We're going to talk a lot about what's happening with crypto around the globe. It's all positive. Banks are involved. We're going to talk about new regulations in China and so forth. So let's start with the first item. Here's the headline. Hong Kong shows desire to be crypto hub with new regulation. But wait a minute. Pump the brakes for a second. Isn't Hong Kong a region, a territory of China? Hasn't China banned crypto? Yes. Hasn't Charlie Munger just earlier this month said the US should follow China's footsteps and ban cryptocurrencies? Yes, he did. Right? So what's happening here? Well, it's like I've been saying for a long time. Any country that bans crypto is writing their economic death sentence, because this is the future. This is what's going to drive GDP. This is what's going to drive innovation and jobs and so forth in the future, guys. It's starting already, but it hasn't matured yet. So all these initials bans and this and that and dog and pony shows are not going to last. They need to adopt or they will die, right? They will have their blockbuster moment. And the fact that China is letting Hong Kong do this is very interesting. It shows the narrative is changing. Now, it's not going to happen overnight. I don't think China next month is going to unban crypto, but they will eventually. And I think Hong Kong is that testing ground. And let me give you some facts, even recent news we covered just last week and the week before. So as the US government continues to rein in the crypto industry with a spate of regulations, other places are emerging as new hubs for the virtual asset industry. On Monday, Hong Kong proposed rules that would let retail investors trade certain large cap tokens on licensed exchanges, a stark contrast to mainland China across its border where crypto-related transactions are outright banned. Now, what we've seen through social media, though, despite the ban, there's still people mining Bitcoin in China and even using crypto. They use VPNs and different technologies. So it's not like the Chinese government has been going around checking everybody's houses and, you holding crypto, yada, yada. People are still doing it, right? Now, certainly if they get caught, they will get in trouble. But my point is that you can't really stop crypto and you can't outright ban it, right? Sure, they can try to stop exchanges and so forth, but let's continue. The city's Securities and Futures Commission did not specify which large tokens would be allowed, though a spokesperson from the regulatory body said they would likely be Bitcoin and Ether, two of the biggest digital assets by market value. Since China's crackdown on crypto trading, the country's Web3 startups have largely given up on their home market and shifted a focus abroad. Some of the more resourceful ones have opted to set up new bases in friendlier locations such as Singapore and Dubai, though they normally continue to keep developers in China to tap the country's largest pool of affordable tech talent. With Hong Kong's introduction of a more relaxed regulatory environment for cryptocurrencies, some of these Chinese-founded Web3 companies in exile might return closer to home. See what I'm talking about here, folks? Not just the use of crypto, but the companies. This is what I'm talking about. GDP, jobs, economy, growth, right? Just if China was to just let these folks leave and go to other countries, they're going to miss out on the next, economic boom, right? The next tech boom. So China's clampdown on crypto trading to protect individual investors from speculative activity seems prescient now, given the flurry of bankruptcies and layoffs that have roiled the global crypto industry. But money and talent continue pouring into Web3 despite the burst of the crypto bubble. It's hard to imagine Beijing sitting still while the rest of the world works on building blocks that some argue could spark a new wave of innovation as big as the current internet itself. Exactly, my friends. Exactly what we've been talking about for years on this podcast. These things are coming into play here. And, game theory is playing out. China, as much as they may hate crypto and they want to ban it and so forth, it's either you innovate or you die, and other countries are moving ahead. And this news, by the way, is confirmed here on the Securities and Futures Commission website, Hong Kong Securities and Futures website. So this is very bullish news, my friends, and the narrative is shifting. And, I don't know if this is going to align with Bitcoin's retracement, back to 40 to 50,000. But let's see, let's see what happens in the coming months. Maybe China says, yeah, we're not going to ban this or do that. We're going to unban. So things are moving in the right direction here, my friends. This is very bullish news. Now, you may say, well, Tony, this, I'll wait till I want to wait till I see it, right? Yeah, they can talk all they want. Well, let me give you some facts here. If you've been watching the podcast or listening to the podcast, what did we cover just last week? Interactive Brokers rolls out Bitcoin ETH trading to professional investors in where? The United States? No. Hong Kong. Once again, we covered this last week. Eligible clients include individuals with over 8 million Hong Kong dollars in investable assets and institutions with over 40 million Hong Kong dollars. That's a fact, Jack. And if these companies are feeling comfortable in doing this, it means they're getting the green light, right? Because none of them want to get penalized or dinged by the local securities and commodity folks or the regulators, right? Here's another example. This news is from February 16th. Hong Kong successfully offered inaugural $100 million tokenized green bond. Hong Kong Central Bank had been exploring tokenization of green bonds since at least 2021. So if you're tokenizing, what are you tokenizing on? A website? Nope, you're tokenizing on a blockchain, my friends. They are building and innovating. The tide is turning here. You see the regulatory talk and the rules themselves are being changed. This is very bullish. So let me give you some more details about this bond thing, because it involves the likes of Goldman Sachs and so forth. The 365-day bond at 4.05% yield was offered in collaboration with the Bank of China, Hong Kong, Credit Agricole CIB, and HSBC, with Goldman Sachs as the platform provider. Goldman Sachs, you don't say. The bond is not for distribution in the US, Canada, Japan, or any other prohibited jurisdiction, the announcement said. Folks, do you see what's happening here? I mean, do I need to explain this further? Watch what they do, not what they say. We are seeing the arrows, the path, everything is pointing to crypto, this being part of the economy. Very, very bullish news. All right. You want more bullish news, guys? Trading platform eToro gains New York bit license to provide crypto services. It also secured a money transmitter license from the New York State Department of Financial Services. I hate the bit license idea, by the way, in New York. It is a pain in the ass for many companies. I've spoken to many, there's a long line of crypto companies trying to get this bit license. And it's really, kind of a garden or wall garden that was set up by the Wall Street folks here, and they, you got to get the VIP pass to play here, right? But it's great to see that crypto companies are getting approved for their bit license. This is good. Now, I don't personally use eToro. I don't know if you guys do, but I had interviewed the CEO of eToro years ago, Roni Asia. And, more power to them. Great to see that the licenses are getting approved. That's a great sign, especially what happened last year with FTX collapse, Celsius, and so forth. Now, speaking of exchanges, so Charles Gasparino, Fox Business, tweeted out, "Scoop, following implosion of FTX, Brad Katsuyama's IEX, and IEX is a trading platform. They have an exchange and, they have the cloud service and so forth. They are in talks with Coinbase to create a federally regulated crypto exchange. Sources tell Fox Business. Brad and Sam Bankman-Fried met previously with Gary Gensler to seek approval. Talks progressed until FTX debacle developing." There's multiple layers to uncover here. One, a federally regulated crypto exchange. Very interesting. I think that's what Sam Bankman-Fried was trying to do with Gary Gensler for FTX, of course, where he would create the monopoly, and the guys like CZ, Binance, and others got wind of this, and of course we know how that story ends. So it looks like IEX and the founder, they're going to meet with Coinbase, or they are meeting with Coinbase to try to have Coinbase positioned that way. Now I need to see the details here because I don't believe in monopolies. I believe in, open market competition, and the more competition, the better for users, and the lower fees, the higher level of service and so forth. So let's see where this goes. But clearly, folks are not dismayed about the bear market and what happened last year. Things are moving along. Now, the other layer to this is we know Sam Bankman-Fried was committing fraud. He met with Gary. Gary apparently knew about this, but didn't do anything about it. And he was trying to give Sam that, that free pass, so to speak, and to have him become a monopoly. So this is why this guy, Gary Gensler, is a corrupt regulator and needs to be kicked out of office. But, this is a very interesting move here, and we'll see where this goes. But it's still bullish news when you're talking about federally regulated crypto exchanges. Now, ConsenSys acquires easy-to-use blockchain notification tool HAL, H-A-L, to strengthen Web3 development. The deal, financial terms of which are not public, will bring 10 HAL employees to the developer. So I've often talked about this is the type of news you want to see. Yes, we are all concerned about the price of the assets we hold. We want it to go up. We all want to make money. But there's a path to that, right? There's a method to the madness, so to speak. These companies have to build the infrastructure, bring on new utility, new use cases, new users, and so forth, right? So when I see things like this, mergers and acquisitions, investments, expansions, that raises my bull flags, right? It's like, wow, okay, these people are still bullish. They're still building. They're still investing. So this is great news. So Ethereum development shop ConsenSys has acquired HAL, a platform that sifts through blockchain data and allows users to create notifications for things like trading, governance, voting, and tax compliance for an undisclosed amount. The acquisition brings 10 HAL employees and more than 40 application programming interfaces, APIs, for blockchain listening and signals to Infura, ConsenSys' popular Web3 connectivity layer. The APIs are part of an evolving process to make tools like Infura easy to use as the next generation decentralized internet develops. So very big news here, big acquisition, and bullish news, guys. This is what you want to see. This means the market is growing. People are building. They see the future and what it's going to look like, and that's a great sign. Here's some funding news. Galaxy Digital and PayPal lead $20 million fundraise for Chaos Labs. The startup offers an automatic economic security system and simulation engine for decentralized finance projects. So let me give you the details here. Funding is intended to help build out and expand the suite of risk and security protocols for decentralized finance protocols. According to the press release, they cited that, there's been a lot of crypto assets stolen by hackers, the vast majority coming from DeFi. I've often said I'm bullish on DeFi. I believe DeFi is the future, but 1.0 sucks. It sucks. It has a lot of vulnerabilities, and it's been getting hacked. A lot of protocols, a lot of lending pools, and so forth. So I'm not touching DeFi right now. But in the future, DeFi 2.0, DeFi 3.0, I think those future iterations will address a lot of these problems and loopholes and so forth. So this is great, guys. More funding coming into the market. Let me give you some more details here. Founded in October 2021, Chaos Labs offers an automated on-risk management platform that provides DeFi protocols with customized automated security monitoring with threat prevention and simulation engine that helps verify the protocol's health and stability regardless of current market conditions. The goal is to help DeFi protocols to protect user funds from attacks while also optimizing capital efficiency. Chaos Labs partners have included liquidity protocol Aave, blockchain provider, data provider Chainlink, and decentralized exchange Uniswap. This is big, guys. This is big, and this is a big problem that needs to be solved. So it looks like Chaos Labs, they have a solution, and PayPal, right, is investing in you. Galaxy Digital is, of course, Mike Novogratz, but PayPal, When I see a name like that, investing in DeFi crypto companies, that once again raises my bull flag, guys. It makes me excited for the future. Now, Deutsche Bank completes asset management tests with Memento blockchain, putting Domani's DEXTF tokens into focus. The collaboration between Deutsche Bank and Memento blockchain aims to address the challenges associated with launching and accessing digital asset funds. For the record, I have not heard of Memento blockchain. I have not heard of this token, but it just shows these banks see what's on the horizon. They are building, they're piloting, they're testing. This is just big news here. So Deutsche said in a Tuesday report, the project aims to address the challenges associated with launching and accessing digital funds. This proof of concept was also awarded the Monetary Authority of Singapore's Financial Sector Technology and Innovation Proof of Concept Grant on the 5th of August, 2022, the bank said. The German bank said said in its report that fees on the service were provided by Domani, a Memento blockchain product that includes the DEXTF tokens. These tokens have a current market capitalization of $12 million as of Tuesday. So once again, I have not heard about this. I'm going to look into it. But guys, it's like you can't even keep up with all the news that is happening here. And this is, once again, why I try to bring it to you in a short, digestible format on the podcast and YouTube. So I hope as you're seeing this news, you're just like, wow, right? And that you have further conviction on investing in this asset class and even working in it, or participating in different ways with DeFi, Web3, and so forth. Now, here's some other big news. Nigeria's central bank in talks with blockchain platform R3 for CBDC revamp. The central bank wants full control of the e-Naira and is in early talks with blockchain platform R3 to develop a new system to support the digital currency, according to the report. So whether they're countries in Africa or in Europe or wherever, Asia, everybody, all these central banks are working towards CBDCs. That's the future. They're tokenizing fiat. I have my concerns, right, with privacy and what China's doing and social credit system and so forth. But this train has left the station. I think it's pretty clear, right? When you have countries in Africa, some of them which don't have fully developed economies, right? Their economies are not that great. They are building CBDCs or they're using somebody else's CBDC. It's pretty wild. And, it's always curious. I'm always curious as to which blockchains they're building on. And I can't wait for when that information is released. We know some are on Ethereum, some on Algorand, some on the XRP ledger. And R3, of course, is a big time player in the blockchain crypto space. They, of course, at one point where they were partnered with Ripple, and there was a big thing with XRP with them and so forth. But guys, the token economy is coming, and it's going to benefit crypto, right? The public will be educated about blockchain and tokenization and crypto and so forth. All that is going to do and play well for crypto. It's going to usher more people into the asset class. Finally, speaking of XRP and Ripple, digital asset investor tweeted at attorney John Deaton saying, "Hey, John Deaton, is it possible for there to be a SEC versus Ripple partial settlement and partial appeal, which could end up in the Supreme Court?" John said, "In my opinion, Ripple would pay $100 to $250 million in a settlement if the SEC agreed publicly that current and future sales of XRP are not securities. The SEC is not going to agree to that in the middle of its war versus crypto. Judge Torres could provide clarity on secondary sales, which isn't appealed." Guys, we need Ripple to get this win. We need Ripple to get this win. The entire market needs it. And I hope Grayscale also is able to win their lawsuit against the SEC about the Bitcoin spot ETF. Because as you can imagine, guys, once a Bitcoin spot ETF is approved, doesn't mean that an Ethereum spot ETF or an XRP spot ETF is going to get approved. So we need a victory. We need the SEC to take a big L. We need them to get exposed. And I'm not anti-SEC. I am anti the draconian laws and the lack of working with the industry. Because I believe the SEC has a job to do to protect investors. There are scammers out there, as there are in every industry and asset class, right? And new technology. Scammers try to take advantage of people. They need to be stopped. They need to be weeded out, and the SEC needs to do their job. But what we're seeing is the SEC is operating like the mob. They're attacking good companies and stifling innovation. And there's a clear agenda to protect incumbents like the banking industry and so forth from the disruption that's happening. And that is not what a regulator should be doing. They should be following their core mission of protecting investors. So we'll see, guys. I'm hoping, we hear soon, maybe by March, that, Ripple gets a victory here, but nobody knows the timeline. It's hard to predict these things, and we got to wait for the courts here and the judge. So let me know what you guys think. This is just huge news, right, guys? A lot of bullish news. Things are progressing despite the fears and all this, the Fed, inflation, and whatever else you're hearing on mainstream media. Things are progressing. People are investing, they're building, they're expanding. And I think this Hong Kong news is massive. The fact that China is greenlighting this, guys, it's so easy for them to not allow this. It's so easy, right? Hong Kong is a region of China. They could absolutely block this and stop all of it. But, well, like I said, banning crypto is an economic death sentence. Anyway, let me know what you guys think. Leave your thoughts and comments below, and I'll talk to you all later.